In simple terms, support and resistance are price levels on charts that prevent a price from breaking above or below them when tested either upwards or downwards. This price behavior occurs due to the forces of supply and demand that exist in the market. Think of support and resistance as barriers through which price may find challenging to break through. As you can see, support refers to price levels below the current price at which the demand is strong enough to prevent the price from falling any further beyond it. When price reaches the support level and tries to test it, it will be difficult to penetrate that level due to the higher demand and lower supply at that price. Visualize yourself in the market. When a price falls to such a level, support level, you would naturally be more inclined to buy instead of sell, since you view the price as cheap. Similarly, buyers in the market would be more likely to buy, sellers would be less willing to sell, thereby forcing the price back up again, away from the support level. Similarly, resistance would refer to price levels above the current price at which the supply is strong enough to stop the price from rising any higher beyond it. When price reaches the resistance level and tests it, it will be difficult to penetrate that level due to the higher supply and lower demand at that price. You can also visualize a similar situation in the market when price rises to such a level, resistance level. Naturally, you would feel more inclined to want to sell instead of buy the currency, since you would see the price as being more expensive. Similarly, sellers in the market are more likely to sell, buyers are less willing to buy, thereby forcing price back down again, away from the resistance level. As you can see, support and resistance levels are absolutely key levels to watch out for because they reflect previous price action from the buyers and sellers that highlight the significance of those levels. This is especially so if the support and resistance levels have been tested multiple times and the price has still yet to break through them. This could be an indicator of a strong level beyond which price is likely to bounce off from. For example, you can see that the horizontal support line at 80.347 has been tested 3 times, yet the price was unable to break through it. Similarly, the horizontal resistance line at 80.825 has been tested 4 times and still price could not break through. This indicates that these levels are fairly strong and should be paid close attention when the price approaches them. It's important to note that if a price breaks through a support level, it is possible for it to become a resistance level in the future. Similarly, if price breaks through a resistance level, it is possible for it to become a support level in the future. This means that we should remain attentive to price action in the market and constantly update your strategies based on what has happened. One of the most common questions we encounter is how to determine a proper support or resistance level. After all, when you look at a typical price chart, it seems like nearly every level we draw can be an important level in one way or another. Simply put, there are many ways to draw support and resistance levels, but some will be more accurate than others. For example, there are ascending-descending lines which are typically more inaccurate because the subjective nature of taking the proper levels is too subjective. There are also channels which require at least 2 points on top and 2 points below and are thus generally more accurate. Then there are horizontal support resistance levels, which are the most accurate because it leaves extremely little room for subjective interpretation. Now that you have a basic understanding of how support and resistance levels work, it's time to put your newfound knowledge to action. Let's go back to the first example at the beginning of this chapter, where we encountered the bullish engulfing candle. We've already identified a bullish engulfing pattern at the end of a downtrend, as highlighted in red in the chart. From what you now know, you can tell that it's a pretty good signal that a reversal to an uptrend might be well underway. How can you now use your understanding of support and resistance levels to set up a good trade? Based on previous price action data, we can find a swing low at 1.16120 that occurred in the past that acts as our main resistance level since price has yet to break through it successfully. This resistance level can act as our stop loss level, giving our trade a good space of about 28 pips to breathe before the uptrend begins. The good thing is that, since we've placed our stop loss at a known resistance level, we can be fairly certain that the price would be unlikely to break through it, staving off fears of getting stopped out too early. Additionally, we can use previous price action data to identify a few take profit levels at 1.17036, 1.17588, and 1.18393. These are support levels that the price has broken through on the downtrend prior to the bullish engulfing candlestick setup, hence it's possible that they may become resistance levels in the future, though the strength of these resistance levels remains to be seen. Hence, it would make sense for us to use these levels as take-profit levels, where we can partially close or scale out our positions at each level. This allows us to take in profits should the price reach each of these levels, and scale back on risk at the same time by not risking the entire position size to only take profit at the highest level of 1.18393. As you can see, price did go into an uptrend after the bullish engulfing pattern. In fact, it managed to break through the take profit levels at 1.17036 and 1.17588 as well, and ultimately reached our highest take profit level of 1.18393. Thanks to your knowledge on price action, you were able to rake in quite the profit. Some of you may ask, why not set only one take profit level at the highest resistance, which would return more profits for my initial position? Well, you must understand that price could have done anything at each of the resistance levels. It could have reversed at the lowest level too. If that had happened, wouldn't you have been glad to take in at least some profits first? Remember, support and resistance levels are not a foolproof method in determining how price can act. It's simply a tool with which we can estimate the probability of price action in the future, and as with all of such tools, it can never be 100% accurate. It's over for this video, and I would like to ask you a favor. Can you please like, subscribe, and turn on notifications so you don't miss the next video?